Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Welcome to another video on your channel Profit and Equities. In this video, we'll be talking about a hidden gem in the small cap space where the promoters are aggressively increasing their stake and where a significant amount of wealth can be created going forward. Also friends, we run a couple of very successful Telegram groups and channels where we discuss profitable stock opportunities. While in the investing group, we are up close to 30% returns since inception, even when most professional fund managers have underperformed. On the trading group, we have done better and have almost doubled our money. If you want to go ahead and join our Telegram groups, please go ahead and open a trading account through either Upstocks or Zerodha, the links for which are present in the pinned comment. You can also choose to become a YouTube channel member to join the group. Also friends, this is not our own research. We'll be providing a link to the source for this video in the description section. Please go through it to build more conviction around your investment decision. Please watch this video to know more. Now the company in question is Sinclair Hotels Limited, which is available at Rs 310.35 and the face value for it is 10. The symbol for it is SINCLAIR. Now with heightened risk aversion, Indian mutual fund managers too are gravitating their holdings in a select few mega cap stocks. Although this divergence between the smaller companies and large caps can persist for a while, more often than not market recognizes its folly and there is a scramble for sharp re-rating. It is almost impossible to exactly time the entry in such undervalued stocks before such sharp re-rating occurs. One needs to display patience in holding such undervalued stocks, and Sinclair seems to be one such example. Now Sinclair has 4-star properties in 7 locations in India, 5 in West Bengal and 1 each at Ooty in Tamil Nadu and Port Blair in the Andamans. The company owns and operates at prime locations in Burdwan, Darjeeling, Duars, Kalimpong, Ooty, Port Blair and Siliguri. Now the hotel industry is usually characterized by very high staff turnover, hence one of the key strengths of a good hotel chain is a stable and experienced core management team. In the case of Sinclair's, the core management team, including its CFO, senior general manager and general manager, have been with the company between 24 to 27 years. The company has also tied up with leading inbound tour operators and there is a long-term arrangement for hosting groups from France, Japan, UK, South Korea, Taiwan, etc. The company's current market capitalization stands at Rs 173 crores. It enjoys gross margin levels of over 45%, which is one of the highest in the industry. The company also has a strong balance sheet which is debt-free with liquid cash of Rs 53 crores as of September 2019. The company has also got one idle land parcel in Kolkata which if sold would conservatively fetch around Rs 25 crores. Considering all the factors, this company is available at an EV to EBITDA multiple of close to 4 times and the company has a net worth of Rs 103 crores out of which Rs 53 crores is in cash and cash equivalents. Sinclair is estimated to report a PAT of Rs 15 crores for FY20. With a net worth of roughly Rs 50 crores, it will report a strong return on equity of 30%. The balance sheet strength can also be measured from the fact that all 7 properties are owned by the company and the unique locations and views offered by some of these iconic properties make it almost impossible to rebuild. The replacement cost of these properties is significantly higher than the current market capitalization of Rs 173 crores. Now the outlook for this company looks strong with improving business and leisure travel and higher rating on TripAdvisor. Port Blair and Andaman facility was on renovation last year, which is finished and going ahead, it should see the benefits of full realizations and higher occupancy. Management is also talking to a few hotel owners for the lease of new properties where they see synergy in operations. The government has recently announced a reduction in GST from 28% to 18% for premium and luxury hotels, which is expected to give a significant boost to the tourist traffic and augurs well for the company, which has properties in attractive tourist destinations. This undervaluation can also be put in perspective with the fact that the management has increased its stake from 56% to 59% in the last year. Once risk aversion recedes and a semblance of sanity is restored, with investors overcoming the fear psychosis of erosion in capital values and a lack of adequate liquidity in small and mid-cap stocks, they will start crowding out of the handful of mega-cap behemoths where there is no comfort in valuations. Now as you see, this company has not really created any major wealth over the last year or so and is trading at a cheap valuation of 14 times earnings compared to its industry PE of 44.87 times. The price to book ratio of 1.72 is also not wildly expensive. None of the promoters' holding is pledged and the same stands at 59.18%. Now, this research was not carried out by us. We'll be providing a link to the source for this video in the description section. Please go through it to build more conviction around your investment decision. Thanks for watching, and if you have not already subscribed to our channel, please consider doing so.